Ladies and gentlemen, fellow traders, welcome to the live show. It's a wonderful Tuesday, the 4th of November. It's almost the end of the year. Christmas is almost here. Insane if you think about it. The year's just flown by. It's gone past so quickly. You get to my age, years fly by quite quickly, and you just get older and older. It's quite crazy, actually. Anyway, today we're going to talk about price action. Trading price action, trading with price action. So I'm going to get to that a bit later in the show. Well, we'll start early, but not right now. We'll wait till everybody gets here. We'll talk about that. Hope you guys are all well. Hope you guys are all making loads and loads and loads of money. Let me just move my picture out the way. But before I do that, don't forget, trading's risky. Most traders lose money. If you don't like risk, you don't like losing money, then yeah, probably shouldn't be trading. Let me take my picture and put it up on the side there, out of the way. Actually, let me take that thing and move it out of the way as well. Boom, there we go. Okay, that should work. Now you can see. That's great. Okay, let's have a look at what's going on in the world and what's been happening. Where are we? Trading platform. The S&P 500 is starting to take a bit of knock. It's actually taking a bit of strain. The markets are under strain. So that's actually quite interesting, and it's been quite an interesting time. You guys will notice that I've actually, on the Telegram channel, what I've done, just to show you guys, I'll show you now, hopefully it'll come up, but on the Telegram channel, what I've done is I've started loading the videos that I'm putting out for you guys. So this is the live show, so some of you might have found that. This is the shorts that I'm making now. I'm doing a short series on information on the markets. I generate it with a script, so that's actually just so that you know what's happening in the markets, and then if any videos come out, the trade of the days I'll put out, and also the videos that go out on a general basis. So if you're on the Telegram channel, you'll get first-hand information as to what's happening next and what's going on. That kind of helps you as well. Back to the charts. How's it, Peter? Good to see you. Hello, Fani. Good morning. And the Motley crew, yes, and the A-team and all the rest of it. Peter, on my personal side, I use investment accounts and I use a CFD contract account. Actually, more than one, to be fair. And on the YouTube, I use these funded accounts. And my main reasoning for doing that is, you know, I'm not too concerned about, you know, what I trade, when I trade. It's if I make a mistake, it's okay. I'm not playing with hundreds of thousands of dollars on YouTube while I'm concentrating on video rather than the chart. And then also, I don't like putting my cash account numbers out into the public domain, because it's a bit like putting your bank account number out there. I'd rather not do that. Okay, so anyway, so these are, yeah, these ones that you see. We've got the C Trader. We've got this. There's another one that I actually can't even show you. I tried using that one. It doesn't come up on this the streaming. But anyway, we use it so that we can do some training and a bit of training exercise. But yeah, the S&P 500 is definitely taking a bit of a knock. It's doing a bit of a fall. How's it, Blue Mango? Okay, so then euro, US dollar, that is definitely bearish, going down, falling to the downside. Looks like it's pretty much probably going to go all the way back to the 114. So yeah, that's quite interesting, actually, how that's falling. I bet you guys all want to know which way gold's going. So do I. As I've told everybody a million times, we can't predict the future. The charts can't predict the future. It's 50-50, whatever. But particularly when it's in a situation like this, I mean, how are you going to tell which way it's going to go? It's in the middle of a situation here where it could go up or it could go down. But as I said in the members video this morning, I was actually talking about this a little bit in general on the gold. And the gold interests me because if the indexes keep on dropping, if there's a bit of pain, if there's a bit of problematic issues in the indexes, which we've seen, then this might start cycling back up again because it becomes the safe haven trade. And all those institutions might start cycling their money back into gold. But I see this as basically a result of the indexes seem to settle down, the human beings started to settle down, and the institutional money started to cycle back out of the commodities and back into the indexes. Not seeing any commodity super cycle, also, seeing that the indexes look pretty fair and pretty normal. Now, if they start cycling their money out, then this is going to drop. So what I'm waiting for is to see if it drops below that red line or if it drops above that yellow line or goes above that yellow line. Because what I do see on a picture is a giant head and shoulders. And if that giant head and shoulders happens to play out, then you're sitting with a situation where this could go pretty far down, 3,300, somewhere around there. If you project that head size, that's the concern. But if the indexes start correcting and start coming down quite far, there's a good chance that gold could become a safe haven trade and it could go back up again. So there's two ways to look at it fundamentally. If you only look at it from a 100% technical view, as I say, you're looking at a giant head and shoulders, you're looking at the possibility of it breaking to the downside. So what you need for that to go away is for it to negate the shoulder and start heading back onto the upside again, giving you a fair run to the upside. So gold's a little bit iffy at the moment. You're not going to be able to call this one just at the moment because fundamentally we don't know what's going to go down. And technically it's kind of in the middle of nowhere. So it's in no man's land as such. So do be careful on the gold front. Okay, so then Brent crude oil. I got caught out by Brent crude oil. Let me be fair, I got caught out by Brent crude oil. Can you believe it? Looked like it was going long, looked like a great trade. Everything was going well. Have a cup of coffee. That's my thoughts on it. It's gone against us. Look at that. Okay, but look, if you take the trend as we stand at the moment, it's still within the bullish trend, so we can't really trade out just yet. Wait for it. Let's see. If it starts breaking down heavily, then I'll reconsider. But as we stand at the moment, we're still in the bullish trend. We're still in that trend, and there's a good possibility and likelihood that it could recover from here and go back up. There is a support level just down here at 63.50. We might wait for 63.50 before we get desperate, but yeah, unfortunately, Brent crude oil, well, it's a 50-50 trade, has done the 50 the other way. But then on the other hand, United States dollar, South African rand has done the 50 in our favor, and it's going to the upside, so cancelling out the failed Brent crude oil trade. And everything was going hunky-dory until the Euro Great British Pound decided to also kind of turn against us earlier, and it's now going the other way. So this trade, let me just put in a position thing here so we can see what we're looking at. So that's our risk, that's our take profit, that's where we stand on this, and we're sitting in the red on this particular trade. But unfortunate, but that's how it goes. Now this morning I was calling a short on the German DAX, but I haven't taken it yet. Even on my cash accounts, I haven't taken it yet because it did the usual and it gave me a tail, and it sort of shot back up. So I'm just looking at this and thinking, should I, shouldn't I? I'm in two minds. I'm still considering my options here because there is a bottom level here, which I just want to make sure that it clears. So I'm thinking I'll just wait for it to clear these lower levels here, and then I'll probably look at the trade then. But yeah, I was calling that short this morning. It looked pretty good. Bitcoin as well. Bitcoin also looking already short. Look at this. It looks like it's falling off the bus. As long as your trading is going well, I'm actually glad to hear that, Fani. That's actually good news. It's always good to hear that you guys are doing okay, doing well, because no matter how my trades are doing, your trades are doing, everyone's trades are doing, as long as you guys are learning from it and doing well and getting ahead, that's actually fantastic. I actually released a video the other day that win rates don't make you money, and I can see that the interest in that is not what people are looking for. People are looking for something that says you can make millions if you just get into trading. So yep, I can see where that's going. But anyway, if you look at Bitcoin, big head and shoulders here again. Keep seeing these head and shoulders, but there's a bigger one on the left here, and then there's another small one that's developed over here. Look at the shoulder, the head, the shoulder, and it's playing out. The shoulder's playing out. So it looks to me like Bitcoin wants to project down to the 90,000. There's a good chance of that. So anyone looking for a short trade might be worthwhile looking at that. I'm just waiting for it to clear the lower level here. I just want to see that it clears down here, and that might look decent. Might look like a decent short. Bitcoin and crypto might actually go down a little bit, might actually start falling down just a little bit. Good morning, Elaine. Good to see you. Good morning, Paul. Fantastic. Lovely to see you again. Absolutely brilliant. Lovely to have you guys on board. So today, I'm going to be talking about trading with price action. So let's talk about trading with price action. Let's get to it, and let's just have a look at what price action is. And you know, when I first heard about price action, I actually wondered what on earth it is. What is price action? What is price action all about? And how do you work with price action? Because you know, when you're trading with price and there's no indicators, are you insane? How are you going to take these trades if you don't know if it's going up or down? You know, I had no idea what it was actually about and how it actually works. And basically what it's about, you don't need all the fancy indicators that you can get, for example, on TradingView and some of these other platforms. Basically, all you need is a chart. You need the ability to draw a line or a blocky, and you need to be able to draw a trend line in. And that's price action. That's as simple as it gets. You have a chart like this. Now, what are you looking for on this chart? You're looking for a resistance area, a support area. That's all. Now, before it got to this level, so let's look before this. So I'm just going to take that out, okay? Before it got to that level, you had this trading in this range. So there's three ways that we trade, as you know. We trade in a range. We trade with the trend. The trend is your friend. And we counter trade. Now, counter trading is based as breakout trading like this, or break through a trend, which is a counter trade. It's a counter trend, so it's counter trending. So this would be considered a breakout, a break up, and this would be a counter trend because that was a trend. Now, what I tend to do with my trading is if it's in a range, I leave it in the range, and then I put my trend in the range to see which way it's trending in that range. And then I also look at if it's breaking out of that range or if it's countering that trend and going the other way. Those are the simple ways to trade. Those are the easiest ways. Keep it simple, stupid. KISS. Always remember KISS, okay? Keep it as simple as you possibly can. Now, what you're looking at is when you draw a resistance level, you can take it from the day charts. I used to preach all day long that you always go to the day chart, find your levels on the day chart, and come back to the 4-hour. Not completely necessary, but it helps, especially if you're starting out. But for me, it's actually quite easy for me to look at this and say, oh, there was the resistance area before that happened, and I just put the line on the top there. I like to draw them green so I know what's resistance and what's support. And there's my support area at the bottom, and I draw the red line in there. What are those areas effectively? And why do we draw them as rectangles sometimes? Because these areas, it's not a line. You're not crossing a line when you're trying to trade. What you're actually doing when you draw a resistance area in or you draw support area in is you're drawing in an area of liquidity, an area where there's orders. And how do you know there's orders there? Because every time the price gets to that level, it bounces away from that level, which means it's being pushed away by all the orders, which is usually institutions, institutional money, because that's the bigger money. Retail traders make up a very small portion of the market. Most of that money is controlled by the big guys. So when it gets to those levels, it gets pushed away, which is why I often draw a rectangle in, because if you draw a rectangle in, it gives you a wider scope of where things are going. So you can take the rectangle and you can say, well, that's my area sort of there. And then if it's in that area, you're not doing yourself in. I just draw the lines in because it's just easier to draw a line and you can see where it is, and it keeps the chart cleaner as well. Now, if it's just breaking through it slightly, just be careful, because that means it could still be in the block here, it could still be in the area. That's an area of liquidity, because what you have to understand is you're not trading against lines, you're not trading against candles, you're not trading against patterns, you're not trading against maths, you're not trading against bots or algorithms. You're always, always, always trading against human beings or with human beings. There's no such thing as trading against a bot. You're not trading against robots, and I'll tell you why. Because every robot that you see trading out there, every bot that's designed to take automatic trades is controlled by a human. A human is controlling it. Otherwise, it wouldn't be there. It doesn't get there by itself. We haven't reached that stage in technology yet, as far as I know, where robots are controlling the world and pressing the buttons and deciding when a bot's going to trade. A human being still has to do that. So you're still in the realms of human beings are doing that for you. Keep that in mind. Now, you know where the money is, you know where the resistance is, you know where the support is, you know where the levels are. So you can trade in those levels, and wonderful stuff. Now, it breaks out of the range. It goes up, it moves up. Fantastic stuff. You've got the long trade, and off she goes. Leaves a gap because there was a big move over the weekend. Now, gaps always get filled. Always get filled. But the mistake every trader makes is they think it's going to get filled now, or today, or next 5 minutes. A gap can get filled whenever. It could take years for a gap to fill. So don't expect a gap to get filled immediately. But it is nice when it does, because then you know it's filled. So this one's been filled kind of instantly within a few days. So that was always going to be filled. We've reached a level. I thought it would go all the way to the round figure, 7,000. Remember, in price action. Round figures are extremely important, and you know why? Because we're human beings. Once again, I'm going to refer back to humans. We like round figures. We don't like decimals and things. We like round figures. So the figure 7,000 sounds a lot nicer to us than 6,997.5. So we'll target 7,000. I was expecting that it would already target 7,000. I actually thought that this year would reach 7,000 by Christmas. We're not going to, it looks like, if this continues on down, unless we have a sudden jump back up. That said, we can't predict the future. Charts can't predict the future. Trading is 50-50. And win rates don't make you money. As per the last video I put out, win rates don't make you money. I'm trying so hard to get that across. We get into trading and we think, do you know what? I'm going to get into trading and I'm going to take trades. And the more trades that I win, the more I'm going to win. Not true. And that's the fallacy. And that's the biggest downfall of most traders, because you get caught in that trap. You get caught in that trap, that belief that if I win more trades, I'll make more money. And then you don't. And you fail. It's because there's no strategy, there's no plan, there's no business plan. And you're basically making bigger losses than you are wins. You need to make more on your wins and lose less on your losses. Anyway, so this is now fallen over. It's broken the trend structure. So it's broken the trend support. So now it's a counter trade again. The reason I'm showing you this S&P 500 is it's clearly used all three systems in one chart. So it's easy to actually show you how price action works on this chart. So there's broken structure again. Now you'll ask me, what's it going to do about this? Because this was a resistance, not a support. No, once it's broken through and gone up, this becomes a support. It becomes a new support because it's an area of interest that it actually broke away from. Now the question is, when it reaches that, will all of these guys that loved this area push it down? Or will there be enough money there to push it back up again? Always a question, easily answered. All you do, if you're waiting for the long, you're waiting for the green candle. What a lot of guys will normally tell you is, if it goes long, wait for it to come back and retest before taking the trade. I don't like to wait for the retest because many, many times the retest doesn't occur. For example, it breaks out here. They would tell you to wait for the retest. Look, there's no retest. There's no retest here at all. It's just gone straight up. So you could have just taken the trade straight up. This could be the retest happening now. We don't know, but remains to be seen. If you get a green candle going up, then it's going up. If you get the breakthrough and the red candle going down, then we've got an imminent correction, probably down to 6.5 and then probably down to 6.3 if it carries on. Remains to be seen. And that's the basis of price action, keeping it simple. So, to recap, support, resistance, the main areas that you look for. You got your support and resistance, you work with your support and resistance. Your resistance is an area of liquidity, your support is an area of liquidity. Trend lines, very important. Draw your trend lines in. If it stays in trend, you can trade in that trend up and down. If it breaks that trend, then you can trade the other way and counter trade. I like counter trading. Counter trading is very good. There are a lot of things that you can add into price action. For example, supply and demand. I have some videos on that in the system. And there are a couple of other interesting things going on. I'm actually going to bring out a video for you guys that I've called the ghost candle, working on it. It's going to be interesting. You're going to love it. You know, that ghost candle, that candle that appears and then suddenly disappears. Yeah, that video is coming out for you guys. I hope you enjoy it. But yeah, that's price action. That's what price action is about. And if there's any questions on it, feel free to ask, because guess what? Price action is actually the main system that we trade on. We don't use all the other indicators. We don't use the RSIs. We don't use the moving averages unless we just want to do a little confluence check or a double check or whatever the case. So yeah, if you have any questions on price action, please feel free. Here we go. Right, so there we go. That's price action. Let's have a look at who's all here and let's chat. And yeah, that's the course for today. So if you guys just came for that, then the rest of the show is just going to be about me talking rubbish. So, you know, it's up to you. Paul Grassi. Okay. Bonnie. Good morning, Elaine. Paul, Trasuel, Lou, up and down. Bonnie, I've changed my bias on gold, now trading the range. I'm feeling it's going down, but also aware what Rob just said, you can turn around any moment. Yeah, this range on gold is so irritating. I'm trading it both ways, having made some healthy profits the last couple of days. Bots are predictable, humans aren't. I was too stupid for that. Constant optimism for me to break every time. Support and resistance, supply and demand. Okay, so here the one I want to speak about, bots are predictable, humans aren't. What you do have to understand wholeheartedly when you say bots are predictable, humans aren't. Let's break that down. Why are bots predictable and humans not predictable? Because when a human is controlling his own trade, the human becomes unpredictable because they break their rules. Because they're looking at a trade, they see it going red, they go, oh, I'm out of here, I'm not waiting for this to play out, and off they run. Okay, or either way, they take their profits too early, or they do something incredibly different. That's why humans are unpredictable. Why are bots predictable? Well, bots, although they are controlled by a human, by the same token, the human programs his rules into the bot. So he puts his rules in there. Now the human's hands are tied because the bot's doing what he told it to, and the only way he can stop it from doing that is to tell the bot to stop. And normally humans don't do that. They leave the bot to run. So that's why bots become predictable, because a human puts a predictable program into the bot, and the bot runs on that predictable program. And now you can predict what it's going to do every single time. But it is still controlled by the human at the end of the day. And that's the difference. That's why if you break it down, bots, yes, they're predictable to the sense of, depending on how the bot was programmed, depending on what you're going to get. But bots don't control the market. Bots don't take your trades. You see, the fallacy that you have in trading, one of the biggest fallacies, the one that I laugh at the hardest, is they're searching out my stop loss. Everyone's watching me. and everyone keeps taking out my stop loss. They know when I've traded. They know where my stop losses are. They come and they take them out. You know, yeah, I laugh at it the hardest because, to be fair, what is a stop loss? It's an order that you've put in the market and said, if the price gets to that area, that's where I want to get out. But what you've done is, if you had a business, you've taken a for sale sign and put it outside the door and said, I'm selling at this price. So along comes Mr. Pro Trader and he says, well, I need that. I'll buy it when the price gets there. And he buys your stop loss. It's not because he's searching out your stop loss. It's because you advertised your stock for sale and he bought it. That's as simple as it gets. Okay? Remember that. If you don't want them to search out your stop losses, then don't put them in. Control it manually. Have a mental one, but most people can't do that because you can't. That's psychologically, when it gets to that price, the guy goes, ooh, maybe I should. I don't know. No, rather don't put your mental stop loss in. You're probably not going to control it correctly. Rather leave the order in place. It's probably better. Hi, Arthur. Good to see you. One-to-one ratio is fine, Arthur. There's nothing wrong with a one-to-one ratio. All I try to tell you guys always is keep your stop losses the same or as close to the same as possible on every single trade. Work out the size of your trade according to the risk and the stop loss and the invalidation. And then try to make more on your wins than you lose on your losses. If you're one-to-one, you're doing better than most traders in the market, probably better than 80% of the traders in the market. And effectively, if you do target a one-to-one, what you can do with it is quite easy. Is instead of getting out at the one-to-one, for example, this here would be as close to a one-to-one for me as you can get around this area here. So what am I going to do to protect myself from losing money here? I'm going to take my stop loss. I'm going to say, you know what? I'm going to put my stop loss there. And now it's in a positive. It's no longer in a negative. It's in a positive. And if this comes back, so be it. I win $34 instead of $748. Probably not the best thing to happen, but that's where you are. Now, what I can do is if this doesn't break through here and it comes back, it's a failed trade, but I don't lose any money. This trade is now completely free. But if it breaks through there, then I can take my stop loss and I can follow it up. So even though that would be one-to-one, I could follow it up all the way to a 4-to-1, a 3-to-1, whatever the case. So there's nothing wrong with putting a one-to-one in. What I say is don't risk $250 to make $50. You know, don't target $50. If it so happens that this comes back and makes you only $34, just write it off. It's one of those things you didn't lose anything. But don't target that. You want to be targeting that. You want to be targeting as much as you possibly can on any given trade, because that's where the profit is. Most of my profits come from only 1 or 2 trades a year, and the rest that hit target. Those are the profits. And then like 60% of them will be losses or small wins like this. That's because of stop loss. So that's how it works with the strategy. But yeah, Arthur, one-to-one, nothing wrong. Just manage it. Risking $1 to make $5 is not as easy in the traditional markets as in crypto. It's not easy to do that in any market. And this is where the difficulty comes in. You see, this is where win rate comes into it. You know, like you say, Paul, risking $1 to make $5 is insanely difficult. Risking $1 to make $2 is insanely difficult. It's not an easy thing to do. But if you put that in place, if you put a proper management structure in place and say, look, like this Brent crude oil, unfortunately, is going against us, but we've risked 235 to make 369. It's not exactly even a 2-to-1, but it's insanely difficult to reach that target. Now, Any normal trader who's trading with a proper strategy and a proper system like this will in all likelihood at best be a 50-50 trader or less, maybe a 40-60 trader. In other words, you're losing 60% of your trades. That's normal. There's nothing unusual about that, because what you're doing is you're targeting making more profit rather than targeting the wins, because it doesn't help if you don't have these. You see, the guys that are claiming an 80% win rate don't have these targets. They're risking $1,000 to make $50, and then they make those 8 trades that they win, and then the 9th trade they go, oh, you know, I'm losing. You've got to change your focus. You've got to change your focus from winning trades and getting some self-pride to making a profit and working on the bank account at the end of the day. So you're going to take a lot of losses. You're going to have a lot of drawdown in your trading to trade this way. And it becomes painful, because you look at your account and you look at your trades and you think, I'm down, I'm in drawdown, I'm under. What am I going to do? Until that big trade comes along, fills up your account, and then the aha comes to you and you go, now that's why I've been doing this all this time. You see? That's what it's all about at the end of the day. It's difficult. It's difficult to work with a psychology that you're going to be in a loss. It's difficult to work with a psychology that you're going to take loss. It's difficult to work with a psychology and understand that you're going to see lots of red in your trading. It's insane. But when the big ones pay off, you're going to feel a lot better. It doesn't help to win lots of trades. It so doesn't help. I put a short video about that the other day, and you guys will notice that I've put the short series out, which what I do is I put the information together, and then I actually let AI put it together for me and give you the script of the news and what's happening in the market, because I'm running out of time to make all these videos. But you still get your training video twice a week, and you still get your 2 live shows twice a week, and I do as much as I possibly can where I can. So that's not going away. That's all there. But I just added that into the series as well, so you guys can get a bit of news every day and a little bit of fundamental information, because we've been talking about fundamentals on a regular basis, and it's probably handy to have that information. We'll see how it goes and if people are interested in that or not. At the moment, it does seem to be a little bit of interest. At least some people are interested in it. Just a question of how I put it together. You started your trading career with crypto. Yeah, crypto is very, very volatile. But, funnily enough, for those of you who started your trading career with crypto, you actually have a slight advantage in the sense that you're used to the volatility, you're used to that movement, and it's not gonna you're not gonna be afraid to trade indexes and Forex and things like that. It's gonna be quite easy for you in comparison. But the one thing you do have to watch out for is that things like Bitcoin, ETH, and that trade over the weekend, and you can always control your trade. Indexes do not, and Forex does not. It closes on a Friday afternoon, opens on a Monday morning. You leave yourself open to destruction, okay? And that destruction is the following, and I always tell you guys to be careful of this. If you are leverage trading, now I'm not worried about spot trading and investing in things. I've got investments and they lie there forever and you forget about them and it doesn't matter what happens. It's one-to-one money. If it goes to zero, then my account goes to zero. If it goes to $1 billion, then my account goes to $1 billion. That's how that works. But leverage trading is different. Leverage trading you have to manage. And leverage trading, the reason for that is with leverage trading, you risk $10,000 to trade $100,000, just as an example, if it's 10 to 1, whatever. Okay, now you're out there taking this $10,000, trading $100,000, and now you don't manage your risk properly, and within 10 trades you lose, and you lose everything. But it gets worse. If you go in on a Friday afternoon and everything's hunky-dory, in fact, you're in a profit. And it all goes pear-shaped over the weekend. On Monday morning, the price could open somewhere down in the pits. There's a huge gap. And suddenly, your $100,000 account is $500,000 down. Don't think that, oh, I've lost my $100,000, I'm going to go and cry and, oh, damn that, you know. No, it doesn't work like that. No, you get the margin call. You get the phone call at 9 o'clock 1 minute past 9 in the morning. Your account is now $500,000 down. You've only got $100,000 in the account. You owe us another $400,000. That's how it works with leveraged contract trading. Now, I had a few friends that didn't make it because of that. Watch out for that one. Always watch out for that one. Funded accounts, no problem, guys. I mean, funded accounts, you're just going to lose the funded account. You can get another one. No big deal. It's a few $100. I never liked funded accounts until this year. And my reasoning was that I thought they were all scams, obviously. But then I realized they play an important role in the market because so many traders don't have capital. Capital is the most important thing. A lot of people think they don't need capital to get into the market and trade, and they can just trade with a few $100 and they'll be rich. If you're going to do that, you can, but then you have to understand that you can either lose it or you can use it and build it over time very slowly. But if you want big money and you want it quickly, you need big capital. Anyone who tells you, I made $150,000 today has got at least $500,000 in their account that they're trading with. So, you know, you've got to equate the two. You've got to balance the two. But there's a lot of people that don't have capital to trade. There is no capital. You know, it doesn't fall out of the sky, does it? So what do? And then I realized that funded accounts kind of fill that gap for people. It gives you the opportunity to trade with large sums of money. And then you get a cut of those profits, generally, if you've got a decent funded account. Now the question comes in, why do I also like them, is because when you first get into trading, so for the new guys that get into trading, you do a demo, and on that demo you do so well. And then what used to happen is you would take that money and go straight into leverage trading with contracts and real cash, and then lose that real cash. And my big concern with that is if it's your last money in the world, that kind of becomes a problem, especially if it's a pension or something like that, and you can't get another job. So that's quite tricky. Then I realized that funding accounts are a nice thing to put in the middle so you can learn psychology, because now you're invested in it, you've got some money invested in it, and you're also invested in getting some profits from it. So now you're looking at, I don't want to lose it because I've got something invested in it. So you can sort of learn a little bit more about the psychology of trading and the risk of losing your account. So then it sort of takes you up a level before you take your real dosh, throw it all in the market. And just bear in mind that the fear is your biggest enemy. FOMO and fear is your biggest enemy. It's going to hurt you, besides patience. But FOMO and fear is a big one. And the trouble is, if you're a rich guy who's got a few million in the bank and you take $100,000 and you risk it on trading and you're learning how to trade with it and you're losing $10,000, you'll be upset, you'll be a little bit iffy, and you'll be a little bit shaky about it, because anyone would. But it won't destroy your life. You only lost $10,000 out of your millions. But if you only have $100,000 and you put it in the markets and you start losing $10,000, the fear level is insanely bigger and immensely different. And it's also different to if you funded trading, if you're trading with the real money. So if it's your last sum of money and you're risking that amount of money and you're losing 10% of it, it's a huge sum of money to you, and you start sweating really bad. That psychology will make you make mistakes. It'll make you start dollar cost averaging. It'll make you start moving the stop loss away because you don't want to lose the money. Because the minute you click the button, see, this is the psychology. You've already lost that money because you're losing it. But the minute you click the button, wow, then you've lost it. Then it's gone. And that's a daunting thought. So you don't want to click that button. So when it goes to stop loss, you move it away. You don't want to do. The mistakes start happening. Don't worry. Every single trader on the planet's made the same mistakes. They've all, and no one can deny that they've made these mistakes. They all have. They've all made the mistakes. But the psychology of trading is interesting in that sense because your fear levels differ depending on where you are and what your status is and how you can handle those losses. You see, you can be a lot more comfortable about being in drawdown or losing if it's not destroying your life than if it's like at the end of days for you. So just bear that in mind. It's important. It really is. Okay, what do we got here? Paul says what he notices his friends in the traditional market don't like the short. What that is, Paul, is it takes, look, I've been trading for 34 years. Okay, it's a long time, a lot of trading. And it takes a lot of time psychologically to get over the idea that markets can go short. Because you're initially taught that you're investing in something in the market. So in other words, you're buying into a company with a view to it getting better and stronger. So the short process takes time for the brain to adjust to because everything's upside down. You know, that it takes time to adjust to that. Surprising you say that about Forex traders, though, because they should be the same as crypto, but because that's also very cyclical, up and down. And I'm surprised the crypto traders are not adverse to it because crypto tends to go up like the indexes as well. But like I say, like for a person like myself who's been around for a long time, it makes absolutely no difference whether a trade goes up or down. I'll trade it either way, which is why you see I'm one of those few guys that still has red candles and green candles because I like to see when it's short and when it's long. And it doesn't matter to me whether it's red or green. It just tells me it's going down or it's going up, which way I should trade. And you'll see I think I've got a couple of short trades on here right now. No, that's long, that's long. This one's short, it's going against me, of course. But yeah, I trade both ways and it makes absolutely zero difference to me. But I do see in the market, and I have seen even on YouTube, a couple of traders have actually changed the color of their candles because the red psychologically somehow affects them. I get it. I do get it, but it's all psychology. It's all about the psychology, and it's all about getting your mind around the fact that it doesn't matter which way you trade. You can go up or down. You see, when you have investment accounts as well, you understand that you can only go one way, you can only go up. And so it takes time for a normal person who's invested in stocks and things like that and starts trading to suddenly understand that you can do it both ways. And it doesn't matter whether you go up or down. So what you say there is true. I've seen a lot of that, but it usually dissipates after a couple of years. It goes into the back of the mind and people forget about it. But there are a few people that are daunted by red. I don't know why they can't take it. Makes me question myself so much that I get out just before the trade actually goes my way. The constant struggle to be confident in my trades. What I do, Blue Mango, with what I've always done with drawdown is try to put it out of my mind. For example, here we are in drawdown on Brent crude oil, and we've lost Brent crude oil a couple of times. But what I do is I say to myself, Rob, you've put a trade in. Now, on this funded account, it's fine. It's $300 and $200, and it's not the end of the world. But when you look at the cash account and you're starting to deal with $5,000 and $10,000, $20,000, $30,000, it becomes more daunting, those figures. But what you have to do is reprogram your mind to, I'm going to make more on the wins and lose less on the losses, number one. And number two, what you got to do is say, I've positioned it. That's why I call it position trading. Lots of you these days call it swing trading. Swing trading is when it goes up and it gets to the top, you turn the trade around and you go down with it. That's swing trading. But position trading is you position a trade in the market and you say, that's where I want my stop loss. That's where I want my take profit. Walk away and leave it. I don't sit and watch charts all day. I used to, but I don't anymore. That's why I don't bother with 5-minute and 1-minute charts and 15-minute charts and all that stuff. I take trades on the 4-hour. I position the trade. The trade's positioned because I believed in the trade when I took the trade. And then I try to leave it at that and walk away. When I will get out of a loss early, and there's nothing wrong with getting out of a loss early because you're making it a small loss and you're moving on to the next trade. So don't let that get to you either, because generally that's just Murphy's Law. It's going to happen. You're going to get out of a trade. Let's say we got out of this trade right now. I'd come back to it in 5 minutes and you'll probably be back up where my cost was. That's just Murphy's Law. It always happens. What you got to do is accept that the trade is over once it's over and wait for a new trade, okay? And also, don't get out of a trade early if there's no need. For example, this is still in trend. It's still bullish. It's still there. There is a red candle. It could bounce. It's too early to take that decision. If it goes further through here, I might look at it and say, you know what, it actually is invalid. It actually is done. It's gone below the support. You know, it's kind of over here. I'm not going to wait for it to get all the way to the main loss. I'm just going to go get out. So nothing wrong with taking your losses early. Just don't take your profits early. But yeah, try and look at it as I've positioned myself. I've left my trade in place, and we'll see what happens. That's kind of where you are with it. On this account, over the last couple of weeks, we've had a really bad run of losses. That's how it goes. That's how it goes. There'll be a couple of wins soon. It'll be fine. That's how the market works. Okay. Also, are you still trading that profit account? Yes. Actually, 3 of them at the moment. I don't know why. It was the biggest lesson in my trading career, taking emotion out of the equation. It's very difficult for people to take emotion out of the equation, near impossible, because you're dealing with people's livelihoods and money and lost money and stuff like that. So taking the emotion out of it is difficult. One of the easiest ways to take the emotion out of it is, like I said, just position the trade, walk away. When you come back and you see it's gone pear-shaped, you might be upset, but don't sit and, if you sit and look at the trades, if you sit and watch the charts all day, then the emotions are going to pile in. Yeah, then the emotions are going to start whacking you. Like I told a lot of the guys before, is, you know, I found myself at a point where I'm only trading, okay? I don't have any other businesses on the go, anything. I've gotten older and I don't need them. So now I'm just trading. And what do? Sit and watch charts all day. Then I find myself getting bored, so I start going down to the 5-minute charts and start trading there and getting excited. And then you start making mistakes because you're watching the charts all day. Your emotions start to take over. So fix the mistake. Easiest. You don't need a journal for this, guys. It's ridiculous. Let's have a journal and go and read up on what my, you know, it's all up here. Okay. And effectively what I decided on that point was, no, I'm not going to go that route. At that time, I didn't have something else to do. So I started, you'll be surprised, but I was even playing games on the side and keeping myself busy with other stuff, whatnot, going to the beach or whatever the case. Just get away from it. Just get away from it and leave the trades positioned. You know, one of the worst times is when they have the Fed chair speaking in the US and the market's jumping up and down and you're glued like watching this. Let it go, let it go, let it happen. Let it happen and then deal with it later, okay? Because otherwise you're just going to give yourself a heart attack. And so this YouTube thing is actually an outlet for me. It gives me something to take my mind off, you know, watching charts, watching trades, keeping an eye on trades and things like that. So it's something extra for me to do. It takes my mind away from that whole process. And it helps me because now I get to offload my process onto you and you learn something from it, and it keeps my mind focused on other things as well. So yeah, you know, if you sit and you try and watch charts all day, your emotions are going to mess around with you. I guess that is the issue. All traders are struggling. If we could just get that pinpoint entry to avoid all the drawdowns. Nobody can ever get that pinpoint entry. I've been trading for 34 years, and I still have the feeling that every time I take the trade, it's, why does it go the other way? But it's just a natural thing in trading. It just is like that. It's just because of where you took the trade. 80% of the time, 70% of the time, when you take a trade, it'll probably go against you at the start, and then it'll find its way later on. It just is like that. You can ask any trader. Very few will get into a trade or go the right way, which was why it makes 5-minute trading so difficult. Because 5-minute trading, for example, or 1-minute trading is working on a much smaller sample size, like only a few points or whatever the case. So if it does go the other way, it's going to go swoop you out very quickly. That's why people struggle with that. Whereas with a 4-hour, you've got much bigger gap. So if it goes wrong, and then it comes back. You know, it's fine. It'll swing around. Yeah, never easy. But yeah, on the lower time frames, that's what makes it so difficult for people, because, you know, most of the time when you take a trade, there's a very, very good chance that you're not going to pinpoint it, and it's going to turn against you. I mean, there's many cases where I'll get into a trade. Actually, I wanted to get into this DAX trade, and I see I've kind of slept on this one. But you get into a trade because it's showing you this, and you think, wow, I'm in, it's a good spot, this is perfect. And you get into it, and then it just goes back. And you think, oh, come on, you know, what's going on here? That just happens so often. On this DAX, what I'm actually going to do now is just wait and see if it goes back for a bit of a retest. Because I've been sleeping on it, I missed it. It's okay. That's the disadvantage of not watching charts all day, is you tend to, sometimes you'll miss something. You should actually put alerts on the stuff. Sometimes I'll forget. That's no big deal. US 500 is definitely on the drop. Let's see if it bounces off that level, or if it breaks through. That should actually be quite interesting. For me, it changed when I got comfortable with stop loss, and the worst case here is what I will lose. Big Chip, haven't seen you for a while. Good to see you, man. Yeah, stop loss is managing your risk is the first thing you look at on any trade. You know, if you're looking at a trade and you look at this trade and you say, I'm going to go short here. I'm going to go short on this trade because I look at that triangle. It's broken now. It's broken to the downside. So I'm going short here. Okay. Before I look at the trade and say, well, I'm going to make all that money. No, I'm not interested in that. The first thing I'm interested in is if I take this trade right now, where am I going to put my stop loss? That's the first thing I look at. Then I'm managing my risk before I even start. So what I got to do is I got to look at this and say, I'm actually taking the trade here, and I need to put my stop loss up there because that's where it becomes invalid. And I need to make a profit, and my profit, according to this, is less than my loss. So this trade is no longer viable to me at this point, which is why I said just now I'd rather wait for it to go back and give a retest, because then the trade becomes more viable. If this goes back for a retest, then it goes to there. Suddenly I've got a risk to reward ratio that'll work for me. That'll do nicely. I like these little red and green things that you get with TradingView because they can give you that information. So yeah, it's much of a muchness, but the first thing you've got to do when you take any trade, when you're looking at any trade, look at the risk. That determines your trade size. Because your risk, you're gonna keep the risk the same on every trade, and you want that risk to be on this account $250. So you look at it and say, well, I'm going to put my risk there. How many contracts is that back to there? And how much can I make on the profit? And then you take it from there. And as long as you're making more on the win or one-to-one, then at least you're on the right track. If we take the trade from where we are now, then it's a bad trade because you've got such small win and such big risk. So look at the risk first, and then then you take the trade. Don't take the trade before you've looked at the risk. The random channel. Do you look at the weekly, then the daily, then the 4 hour? That's the best way to do it. I'm actually a very lazy trader. I'll look at a thing and I'll just take it and see where I am. But on the weekends, what I'll do is I'll go through a weekly and I'll go through the dailies and I'll have a look at what we've got in general, see which way the trades are going. It's a bit like if you're trading on a 5-minute chart, and what I always tell people that day trade, because day trading is risky. Most people are going to lose on day trading. But if you are a day trader and you are a 5-minute or 15-minute trader or scalper or whatever you want to call yourself, do yourself a favor and always go and look at the weekly or the daily first and the 4 hour and see which way the market's moving. And then take all your trades on that in that direction, if it's bullish or bearish, okay? And that will hold you, that will hold you in quite good stead. But yes, if you're looking at levels, you can start on the weekly, but I actually just go to the daily. The daily is good enough for me. Take a level off the daily, then you know what your daily levels are, and then you can work off your 4 hour. But sometimes I don't even bother with that. I just work straight on the chart, 4 hours, see where I am. But if I'm really thinking, should I, shouldn't I, plus, minus, what, then I will go up to the weekly, then the daily, and then the 4 hour, 100%. No problem. That's the right way to do it. Totally the right way to do it. But it's a bit like, you know, if you're trading on the 5-minute and you know, that 5-minute, for example, you go into a 5-minute chart, you know how many 5-minute charts are in that one candle there, that 4 hour candle? How many candles are in a 5-minute chart for that? It's huge. Huge. You'll see a massive red line going down. You know, and you'll think, oh, the world's ending. See, but if you know on the 4 hour that it's bearish, okay? And then we go from the daily and you can see that there's a big red candle on the daily. It's pretty bearish. And you can go to the weekly and you go, ooh, it's pretty bearish on the weekly. So what do we know about the S&P 500 now? We know that it's very bearish. And if we go to the 15-minute, it's going to be bearish as well. But that's a whole bunch of candles in that 4 hour and that 15-minute. And if you were to go to the 5-minute, it's going to get even worse. All of these candles are going to be, you know, basically on the 5-minute chart going down. Put it back on the 4 hour. I just didn't want to move the chart around because otherwise it just messes me around. But now, yeah, we know that this is bearish. I mean, if you wanted to trade on the 1 hour, look for a sniper entry on the 1 hour. There you go. It's bearish. Okay. In many instances, we're kind of fooling ourselves by trading on the different time frames, but that's why you look for if you look at the bigger time frames, you get the direction, you know which way the market's going, and you just trade with the direction of the market if you want to trade that trade. And then you'll be okay as such. This trade is now kind of destroying me. So, is it going to go all the way and give us a triple top? Yeah, you see, here's another classic case of you can't get out of this too early. It's going against us, granted. But if I get out of this now, there's a good chance it'll turn around and come flying back down, and I'll be so disappointed. And that's why I've put my stop loss up there. Because if it gets to this green line here, then we've got a 1, 2, 3, 4th time that it hits that level. Now, we all know that if you chip away at a level, it eventually breaks through. But if it doesn't break through that level, what's it going to do? It's going to come back down again. So, yeah, just hold on to the trade. This is where, if you're sitting watching charts all day, you're going to make that mistake. You're going to come, look at your chart and you'll be like, I'm going into a loss, I'm going into a loss. Big green candles going against me, I'm going into a loss. The first thing you're going to do is you're going to get out of the trade too early. You're going to dump the trade. And then when the trade works out for you, you're going to be like, why did I get out of that trade? because you were sitting watching the charts. If you don't watch the charts, you're going to be better off. The trade will work out for itself, whichever way. David here. Yeah, how's it, David? Good to see you. Good to see David's back. Lovely stuff, guys. Lovely stuff. Not a lot of guys on the live show today, but hopefully you've all liked the live show. Give it a like, give it a button. There you go. Get it going. That's it. Perfect. Get that like on the go. Oh, yes. You see, I don't know if I must move the time of the live show because, yeah, the times have changed in Europe now. I'm not sure where, everywhere. I must have a look at that because you guys moved out another hour. So, yeah, that could be affecting things as well, eh? I might have to move things around a little bit. I'll see. I'll just have a look at. I forgot about that. I was having a look at the time zones. About a week ago, everything started moving around about an hour more. To our time zone, that is. In any event, you guys moved your clocks, man. Sure. At least in England, but I don't know how many other countries. But I know England moved their clocks for sure. And that probably is affecting things in a way. I must have a look at that. Make sure I'm not doing this video for you guys way out of the time zone and messing you guys around. I'll just have another check at that. So earlier on in the video, we talked about the price action today and how we trade with price action. You guys should all know how we trade with price action. That's what all the videos are about, apart from the ones that say trading with RSI, trading with MACD, you know, that sort of thing, obviously. But yeah, we only trade with price action. And the reason we do that is because we don't want indicators all over the chart messing us around. One of the most annoying things for me is always when I have to look at someone's chart and there's 3 million things at the bottom of the chart here, and the chart's this size. The chart's a tiny little chart at the top. You can't even see the chart. And then on the chart itself, there's like 20 moving averages and a whole bunch of lines. And yeah, no, can't do it. It doesn't work for me. But I've been there, done that. I did that as well. I was also there. My earlier years, I had all kinds of stuff on my charts, thinking that they were somehow going to be somehow or another beneficial to my trading. That charts were somehow going to predict the future, that some magic pull, some magic system is going to come out and it's going to tell me where the trades are going to go. And like you said just now, give me that perfect entry into the market. I know that if I've got this system, I'm going to put my entry there and it's going to work for me, isn't it? So I used to have, I think my favorites were, I had MACD, RSI, stochastic, volume. I think those were my main ones. Those were about 4 or 5 at the bottom of the chart, taking up most of the page. And then on the chart itself, I don't know how many moving averages, because the moving averages all cross each other. So you would have like the 100-day, the 89, or sometimes it was the 100-day, sometimes it was the 89-day, okay? Then the 50-day, because if those cross, then that's important. And then I had the 20-day, and then the 9-day, or the 8-day, depending on how I felt. And then you've got the 200-day moving average, just because, you know, you might as well see what the 200-day moving average is doing. So now you've already got 5 moving averages on the chart. And then you start drawing a million lines in. Now, one of the worst mistakes you can make is you draw support and you draw resistance in, right? So support and resistance. And then you draw all the lines in the middle. All the levels in. So now you've got a plethora of lines which look a bit like a Fibonacci. Now, there's nothing wrong with a Fibonacci, but you draw Fibonacci in, you just sort of see where your levels are and work with that. You don't need a Fibonacci because you'll find that where you've drawn your level in, that's where your golden zone is probably anyway. Try and keep it simple. On this one, I've already got one line too many, but the reason I've done that is because I'm watching if gold is going to stay in this little area here. That's why I've drawn that one in yellow. But what most guys will do, they'll have a line there, they'll have a line there, they'll have a line there, they'll have a line. So you've got 50 levels to go through. Now, the trouble with that is every time it breaks through a level, You think, oh, it's going to get stopped on that level. It's going to get stopped on that level. It's going to get stopped on that. You're never going to get into the trade. You're never going to be able to take the trade. Just clean it up. Take the stuff away. Don't worry about it. I've seen some charts which are just horrifying, and I don't know where to look. Don't know what to look at. You know, every shiny new tool you find, you leave on the chart. And that's one of your biggest mistakes. You find a shiny new tool and you leave it there. And you get another shiny new tool and you add that to the chart. Eventually you can't see the chart. Yeah, just be careful of that. I did chat about gold earlier. I did mention gold earlier. Just had a look on my machine for spyware. How do you know what's happening on my workspace? That's interesting. Can you be profitable if you only trade psychological levels? Arthur, you can be profitable if you trade with anything. The mistake that people make is they believe that charts will make them money. They believe that charts will predict the future. And you can literally go to the S&P 500, toss a coin and say heads or tails, buy or sell, and then manage the trade according to whichever way it goes. So it's all about the strategy. It's not about the chart. It's not about the chart. You know, how do I make my profit? On an annual basis, not on a daily basis, not on a 5-minute basis, not on an hourly basis, over a period of a year. Look at the overall profit. You see, the whole strategy is, I'm not looking at a win rate. I'm looking at a package. I'm looking at, I want to make more on the profitable trades and lose less on the losing trades. Over a period of a year, I'm going to take a few hundred trades. And of those few hundred trades, I want to win at least 40% of them, perhaps 30% of them. And I want them to be bigger wins than there are losses. That way, giving you a profit package at the end of a year. Not this business of, how much did you make this minute? How much did you make tomorrow? No, that doesn't work. You're fooling yourself. You're trying to win on a win rate. You're trying to let the charts predict your future. You're trying to let the charts predict your wins. You are going to be in drawdown if you're working a proper system. You are going to be in loss if you're working a proper system a lot of the time while you're trading. Keep that in mind. You can't just win every trade. You've got to learn to lose to win. It's so difficult to get across. Gold, I'm looking at gold. As I've said, I discussed gold a little bit earlier. Gold is in this no man's land. It's in a no man's land. Giant head and shoulders. And as I said earlier, I'm going to go over this again with gold. Fundamentally, all the institutions bought into gold. They bought into gold because gold seemed like a great place to put your money. It's a safe haven. That's what institutions do. And they jumped into gold, also looking at the possibility of a super cycle because the dollar is collapsing. So they all buy into gold. Gold looks like a great buy. The indexes start recovering. They start doing well. China makes a deal with America. Everything seems to be settling. So the institutions go, oh, wait a minute. We can put our money back into the normal place, the indexes. So they start piling out of gold. Remember, I told you this last week. Gold, they're going to pile out gold and gold is going to correct, which it has now done. It has corrected. Question now is, will they continue to take their money out? Because there's a bit of indecision here. Or, you know, are they thinking the indexes, because they're correcting a little bit here, if the indexes start to correct a lot more, then there's a good possibility that they might start putting their money back. But if they don't, and the indexes start coming right, then this is going to collapse further. So technically what I can see, giant head and shoulders. And if that plays out, it breaks below that red line, that head is going to play out all the way down to about 3,300, big short, okay? If that doesn't happen and it breaks to the upside and it breaks the shoulder, then the head and shoulders is negated, and then it's bullish all the way back up again. That will be because the indexes are probably failing and not doing well, or the world is a bit shaky again. So the institutions start doing what? They start putting their money back into commodities. So this is in no man's land at the moment. It's between these. That's why I've put the extra line in here, which is kind of a resistance, and the extra line in here, which is kind of a support. And we want to see which way it's going to break out. Then we can determine what's going to happen next. Problem being, we don't have a crystal ball, so we can't really tell what's going to happen next. So it leaves it a little bit complicated. And the Nasdaq's going a bit down. Yes, the Nasdaq will go down the same way the S&P 500 is going down. You do know that the Nasdaq and the Dow is what makes the S&P go up and down. But mostly the Nasdaq, the Tech 100, those tech stocks are the prize of the moment at the moment. They're running the market at the moment. So whatever happens with tech stocks is what happens at the moment. Be very careful of when the tech stocks fall out of favor, because then we're going to see quite a big difference here and quite a big correction. There are 7 stocks holding up the Nasdaq. And the Nasdaq is made up of 100. Okay, so be careful. We follow the Tech 100 and we're all happy and we're all buying. I myself, I'm invested heavily in tech. But there's like 7 stocks holding up the Nasdaq, and effectively, if they fail, everything comes down, including the S&P. The Nasdaq can be quite volatile. The S&P is a bit more comfortable because at least it's got the Dow in there and whatever, but it's got a lot more to hold it together, so it won't fall as fast. But if the Nasdaq falls, the S&P falls. If the Dow falls at the same time, generally they affect each other, all the indexes. Even the DAX will react, and so on. The CAC, every one of them, they'll all react one way or the other. You can expect that. Look at the DAX. The DAX is looking very, very ominous at the moment. Like I said to you, I don't want to take this trade because my risk to reward at the moment is not good. I'm hoping maybe we'll get a retest and then we can get a better risk to reward there. Okay. Also, gold is getting dumped, but it's not getting dumped to the point where that's the DAX. You know, where you can say I'm going short. You know, you can't. If I look at this technically, this should resolve to the downside. Should have, could have, would have is a big word, eh? So I'm looking at the head and shoulders. But remember, these are things that have happened in the past. This is history. That's how we do charting. We look at history. But there's no guarantee, because there's a head and shoulders developing here, because there's a bit of movement to the downside, that this is going to go down. So what we do, we give ourselves a little edge and say, well, if it passes that level, then clearly there's negative sentiment. It's going to go that way. Or if it passes that level, then clearly there's some positive sentiment. It's going to go that way. That's how we look at the charts, okay? The charts are 50-50. What you're looking for is that edge or that information. And I see Brent crude oil is now going against me quite seriously. So there is a good chance I'm going to have to dump it. Yeah, it's not looking too good, the Brent crude oil. It's looking rather ominous, but there is a level here, so we should wait for that level to play out. Is that a level that I've got drawn in there? Let's just draw it down to there and just see what it does. But it's going to be so close to my stop loss anyway that we're just going to let that run. That one's not working out, and this one has turned against us rather quickly as well. But there could be a triple top waiting to happen there as well. So yeah, sit with the drawdown. That's what happens. You sit looking at charts and you think, oh, why is it losing so much? And then you go and look at it, and just take time and just look at the picture before you jump out of trades. The Russell should move independent. The Russell's an anomaly that I just don't bother trading. But yes, if you want to trade it, you can trade it. It trades independently. It's just a market I don't bother with. Okay. I couldn't even tell you where it is at the moment, to be fair. I just don't waste my energy on it. But if you want to trade it, there's nothing wrong with it. Just can't be bothered with it. Lumenga, I'm actually pointing to 3,300, and let me show you why I'm pointing to 3,300 on gold. On gold, if the head and shoulders plays out, I wonder on this chart thing, can I draw a line, straight line, vertical line? Now it's going to go the whole way. Info line, maybe that'll work. See, if you take the head, okay, and you draw it down to there, okay, that's your projected level for the head and shoulders. Now, what you do with the head and shoulders is you take that level and you project the level, and that level for me is 3480, so that's the 3,500. And I was actually looking at the support down here. The last support is at 3,300. So it could go all the way to 3,300 because, I mean, if it goes that far, there's a lot of momentum that could take it just that little bit further. So I'm calling probably 3,300. 3,500 is why they're calling the 3,500, is they've measured the head and shoulders. That's how you measure a head and shoulders. So by the way, okay. And yeah, and this looks like 3,500. So pretty much of a muchness, that's where it's possibly going to go. If it goes to the downside. If it doesn't go to the downside and it goes to the upside, then it will go back up to the 44 quite easily. Maybe give us a triple top, I don't know. But yeah, people are calling gold. But, you know, just think about this, guys. Just think about this. Don't let this go over your head. Just the other day, last week maybe, was it last week or the week before? People were calling gold at 15,000. All these experts were saying gold's going to go to 15,000. Some were saying 7,000, 5,000, whatever. Some were literally calling 15,000. And I said to you guys, watch out. It's risky. It might not go there, possibly turn around right here, and it did. So I thought it might get to 4,500 because it's a round number, but it didn't. And it just basically has fallen all the way back down again. Now, a week later, all those same people are calling it at 3,500. So, you know, don't listen to the calls. Work it out for yourself. Just think about things logically. Work them out for yourself. That's the best way to do it, okay? Don't let them call it for you. Just work it out on your own. Just remember, guys, nothing I say here ever constitutes financial advice. We do this out of the goodness of our hearts, and we just talk about all the things that I've experienced over the years and all the things that you can maybe avoid in the future if you're new to trading. I'm not sitting here telling you that I'm the best trader in the world. I'm not sitting here telling you that I'm a genius trader and I made $100,000 today, or I lost $50,000 today, or anything like that. That's not what I'm here to do. I'm here to show you what trading is about and what I've been through and what you might just go through as well, so that you can understand what trading is about. Is trading a good thing? Yeah. Why would I still be here after 34 years? Why would I still be here? Why would I still be trading if it was a terrible thing? So, you know, it's much of a muchness. I just want you to understand that it's not just, oh, get into the market and make a fortune. It doesn't work like that. yeah, most of my profits will come from my investments and time in the market. I just figured out that you can't time the market. And the fact that you can't time the market basically tells me that you have to find a way to work with trading where you're not timing the market, because you're going to take losses. So how are you going to work around this situation? And the only way to do that is with a proper strategy where you manage the trades. And it really doesn't matter how you take the trades. That's one of the reasons I took all the indicators off my charts, is because I realized, what's the point of having all these indicators telling me which way the market's going to go if it doesn't matter anyway? It doesn't really matter. It makes me feel better because I think I'm taking the trade the right way. But it's not going to tell me anything that I want to really know. I can literally sit here right now and say, well, this is a funded account, so I don't want to do it. But there's 1, 2, 3, 4, there's 8 trades here. We could take all 8 trades based on, yeah, maybe not, and then walk away, and we should win 4 of them and lose 4 of them, basically. And that's the basis of it. It doesn't matter. You could just take all, it doesn't matter where they are, you could just take all the trades. There's German DAX, you could just take the trade and hope for the best and see what happens. It really doesn't matter. If you apply FIB to gold for the last leg up, 38.40 would be the. I was short trading gold, and I have my take profit at 38.50. Let's just have a look at gold on the FIB, just out of interest. Okay, let's have a proper look at gold. Let's see where we really stand on gold, because you guys are taking FIB from here, okay, or whatever. If you're going to work with FIB, right? I hope that's FIB. You're going to have to do that, okay? You're going to have to take the whole move, right? Oops. Okay, so there's the move, right? So your 50 is at 38.50, and your 60 is at 37.26. So you're correct. That's perfectly correct, okay? But it's not to say that it's going to stop in the golden zone. So your golden zone here is sort of between 37 and 38.50 in that area there. So there's an expected, on a FIB, an expected sort of turnaround here, perhaps. Yeah, I get it. But it could go down to the 786, and it could even go down to the 100, which is the 33. So yeah, you're right. The golden zone is sort of between 37 and 38.50. Totally right. Okay. Interesting. Look at a FIB. But use the whole length of the move. Don't just use the last bit. Sir Lunchalot, hello, how are you? No, Sir Lunchalot, I'm actually not early. We are not early. I made the old mistake of forgetting that the rest of the world moves their clocks around. I might have to move the time of the show on my side, because the rest of the world plays around with their clocks. I don't do that. We don't do that. And I kind of forgot. And then sitting here earlier on with like 2 viewers, I was thinking to myself, well, perhaps what's actually happened here is you guys are all still in bed or something, because the clocks have moved. Too late now, we're here. So yeah, it is what it is. So what I'll do, maybe next week, I'll just look at the times and see if I need to move the times around a bit and shift it according to that. Maybe I'll even shift it on Thursday, but I'll let you guys know on the Telegram channel, you know, when it's going to be on and things like that. So, but yeah, might be advisable for me to just shift things around a bit, because, yeah, the clocks get moved around. I noticed it on some shows and stuff that I was like, oh, the time's changed. What's going on? Oh, I didn't even realize that the time had shifted. Okay, so lunch a lot, shorting oil. Yeah, you might as well, because I'm long, Sir Lunch, because at the moment I'm having a run against me, so everything I do, you might as well do the opposite of at the moment. But I'm just saying, trading's 50-50. I took a long on oil thinking it would continue on here, and it dropped back. But there's a good chance it could still hold on here. There is a support level here, so just watch out for the support level if you do go short. I am still long on the trade. And then this Euro, Great British Pound, also turned against me, but there's a resistance there. Holding up. And then DAX, we're looking at DAX as well. I think if it goes back and retest, that'll be great, because then we can get a nice trade into the DAX. Yep, yeah, so Lancelot, it's you that's late, but it's not your fault. The times have moved around, so you guys have probably all set your clocks for the start of the show to be at a certain time, and but then you've gone and moved your clocks and forgot that I live on the other side of the world. And so for the guys who live on this side of the world, it's probably straightforward. We'll just go and watch it that time. But for you guys all over the other side of the world, you're all thinking, the show's going to start an hour later, and it actually started an hour earlier for you because you moved your time. But yeah, I'll have a look at it, see what I can do. Bitcoin, for all you crypto traders out there, all you crypto guys, here's another one of those head and shoulders. There's a really big one on the left here, and there's a little one over here. So which one should we look at? Okay, it's breaking past that level. I think we've got a short on Bitcoin. Let's use that line again. So if we just draw this head and shoulders in here, and we say, well, that's our head and shoulders. The small one projects us down to close to 90,000. But if we take the big one over there, just for interest's sake, and we project that down, that's kind of scary. It kind of goes all the way down into the 80s. So I think Bitcoin is looking kind of short, don't you think? Certainly does look like it. Certainly does look like it. Where would you put your stop loss on Bitcoin? So let's just have a look here. We're going to go short position on Bitcoin. And I'm looking at Bitcoin as stop loss 112,689, take profit 90,000. Okay, stop loss 112,689. Can't buy much Bitcoin, can you? And then take profit we'll put at 91,000. Okay. Sell Bitcoin. There you go. Let's see how that works out. I've done that based on a head and shoulders, so we'll see how that works out. Probably shouldn't have so many trades on this account, but anyway, that's okay. Such is life, eh? Such is life. I wonder if we should, this is a funded account, random. So the real money account, you can't see. Should actually take a trade there. It's going to go over there. You guys won't see it, unfortunately. Just go and take a trade on the other side on Bitcoin. While I'm doing this, you guys can just think to yourselves or whatever. I don't know. do the old BT US dollar. What did I say my stop loss was? 112,600. 12600 plus or minus. Okay, 1 million bitcoins. Yeah, that would be nice, eh? Sorry guys, be with you in just a second. Oh, let's put on a sell, man. Hey, that looks great. That looks great. Then take profit 19,000. Definitely on sell. There we go. Hey, that one's in. Hopefully that works out. Okay, cool. Great stuff. Back to the normal stuff. Okay, here we go. Right. Flash Golden, that's a cool name. Not bad. Not bad, Flash Golden. I do like that. If you want to know more about the gold, I've actually discussed gold 3 times on the show already, so I'm going to leave that. That's probably getting a bit too much now. And but gold, as I said, it's in a no man's land at the moment. There is a head and shoulders on it. If it plays out, that'll be nice for those of you who want to go short. But it all depends on the institutions fundamentally on how they decide what's happening with the indexes now. Like I said, if the indexes continue to go down like this, there's a good chance they might cycle back into gold and it might go back up. But in general, it looks like it wants to, technically, it looks like it wants to go short and it wants to drop off the head and shoulders. So you can just look at that. Okay. Yeah, let's go back to the Bitcoin random and let's just show you. You see, there's the head and shoulders. Okay, if you take the projection to the downside, it's going to come down pretty close to here. If you take the big one, it'll go past that. I'm kind of targeting 90,000. I've been targeting it for quite a while. Okay, in this case, 91,000. If you project the head and shoulders down, there's a big one on the left here. There's another one to the right. There's a very good chance it's going to come down to that. You might not do it immediately, but it'll come down to that eventually. Either that, or it turns around, goes against us, and goes flying up to, I don't know, 200,000. That's what everybody was expecting a few months ago. And it doesn't seem like that's happened, does it? Okay, so there we go. We stay in the trades, we wait. Somebody once told me everything cycles back, but it doesn't. It really doesn't. Sometimes things can just keep on going in one direction, and if you're not flush in the market and if you don't have the cash to handle it, then it's going to take you down big time. So yeah. But yeah, Bitcoin targeting down there at the 91,000. We'll see if it gets there. Maybe not. You know, guys are very, very bullish on crypto and that sort of thing. For me, crypto is a lot of old fresh air, but yeah, we'll see what happens with it. Everything's 50-50, everything's a trade, everything just gets managed, that's all. Hey, Ias, how's it going? I haven't seen you for a while. Yes, Bobby. Hasn't been around for quite a long time. You were here last week, though. You did pitch up. I mean, you've gone for a while, you came back last week. Your S&P 500 or your ES would be the same as this, and I take it you are short at the moment, or are you waiting for this bounce off this, what was resistance and is now support? This could be considered a bit of a retest, might bounce and go back up, which would be interesting as well. No, Sir Lancelot, it's just you. Bonnie, you could be right. You could be sensing a bullish divergence based on whatever. It is oversold, but it can remain oversold for longer than people think. We shall see. We'll see how it happens. But, you know, while you are sensing a bullish divergence, I'm seeing a head and shoulders. It is on a support, which does concern me. I just took the trade because it's on a support. But by the same token, I'm seeing that head and shoulders. That does tell me that there's a good possibility that this could fall by the wayside. I'm just going to take this. There you guys. That's a big head and shoulders there that it's playing out. And if it goes, it goes. It goes big time. So let's see if it plays out. If it doesn't, we keep the risk in place. That's it. Divergence. Let's just have a look at the divergence before I leave it. The RSI is way overbought, most likely, because it has been going down for a long time. And yep, there it is. It's way overbought. Bonnie, there's no divergence in this. You see that is bearish. That's bearish. 100% that's bearish. And guess what? That's bearish as well. I can't take it in there, sorry. Let's just get it. That's bearish as well. This changes when it breaks through there, but they're both bearish. There's no divergence. No divergence whatsoever. It's all going the same way. No, there's no divergence. 100%. That's short. Head and shoulders, short. Head and shoulders, big one on the left. If the big one on the left plays out, it's even better. But we've got the small one on the right, which would take us at least down to 94, 95,000. I'd say 91,000 is fair. Looking good on the Bitcoin for a short there, so we'll leave that and see what happens. You long on NQ? Well, it'll be the same as the S&P 500 most likely. Similar scenario, eh? Similar scenario. You know, your gap hasn't closed yet on the NQ. That's interesting. But yeah, it's hitting trend support. But like the S&P 500, it's hitting a normal support or retest. So there's a good likelihood these will turn around and find their way back up again. Unless they break through, of course, in which case they're going the other way. But yeah, and there seems to be a tail there. 25,650. So you're expecting it to turn around. I would have maybe looked at 25.5 for the long, but yeah, you've probably been trading this a bit, but I would have waited for it to get down here before taking the long trade. Yeah, let's see what happens with these things. S&P 500 and NASDAQ, you know, they're all gonna, at the end of the day, give us the okay. So Euro US dollar is short, going down, definitely going down, falling down. Random just asked about that. And my opinion, my feeling on the matter is it's going to the downside. I can't predict that it's going to continue on to the downside. Can't call that. It's a 50-50 trade always. But if I was going to make a choice here, my choice would be to the downside until it. I think it might actually even get down to the 114 as we stand at the moment. It's bounced off the trend resistance. And it's heading down to the trend support, and it's in trend at the moment. So as long as it's in trend, the trend is your friend. There's your trend. There she is, staying in the trend, top, bottom, so might come down all the way to the bottom. It's broken that support as well. You see there's a support over there that it's broken straight through, so it's breaking down on that as well. I mean, we can take this line, which is down there, you can put it there, and it's breaking down on that as well. Let's pull it down a little bit so it's a little bit more fair. Okay, there you go. So it's broken through that. It's gone back, retested, going down. Euro US dollar short, selling down to 114. Looks like a sell. Okay. I don't want to open too many trades on this funded account. I tend to do that when we're on the show, and then I don't watch it again. And I don't want to bust the account for us here. I've got the other ones as well we can use, but you know, I'm opening too many trades on a funded account. On your cash account, you can open 1 million trades, but on this, you cannot. Because they have limits on drawdown and stuff. So let me not start playing around with that here. Otherwise, I'll have to open another one. Yeah. Okay. SPX. Yeah, SPX is S&P 500, US 500. ES Bobby is on ES, which is ES Mini. That's a money contract for S&P 500. There's a whole bunch of contracts which are out there for the S&P 500 that you can trade. Depends on the broker that you're trading with. It's a bit like NASDAQ, Tech 100, all that. You know, you get different ones. You can choose what you want to trade. Okay. So before I go on the show today, it would be nice to see Bitcoin going to the green, because then I got at least 2 green ones and 2 red ones, and that'll just make you feel psychologically a lot better. At the moment, Bitcoin's on a loss on the fees that I'm paying, or the swaps that we're paying on the trade. So that's all. But on the other account, that's different. That's different amount altogether. Nice thing about crypto though is, although I'm not a firm believer in crypto, and I think it's all made of fresh air and it's a Ponzi scheme and all the rest of it, by the same token, it's nice to trade, easy to trade, and also if you got it for the weekend, you can trade it over the weekend. You know, if something goes pear-shaped over the weekend, you can trade in and out of it, which is great, which is good on crypto. That's pretty hectic. Now, what a lot of people do with crypto is they don't actually trade it on these charts. They don't actually trade it on these platforms. They actually on the ETFs, exchange traded funds. That is, I know I hate abbreviations as well. They actually trade it by earning it on the what do you call it? On the platform itself, on the main wallets and things like that. So you can hold it there, and it can grow in your account. So if you've got Bitcoin in your account, you can just hold it. If you've been paid in Bitcoin, you can just hold it. If it goes up, you know, which is also fair. Nothing wrong with that. I mean, I do have now wallets with Bitcoin in, but do I really care? It's not big amounts. If Bitcoin was to close tomorrow, I wouldn't go bankrupt, that's for sure. Okay. The volume on the weekend. I get that. Yeah, it probably would be, because most people don't trade on the weekend. You know, I used to spend a lot of time on the weekends doing research and going over my accounts and all the rest of it, and working these things out and stressing about Monday morning and all the rest of it, because, you know, the chart's going to open on Monday morning. Couldn't wait for Monday morning, but I could also, like, you know, what's going to happen next. So I stopped that many years ago. I enjoy my weekends now. Friday afternoon, I shut it down. Monday morning, I open it up again. Sometimes I got a bit of time over the weekend. I go over the charts. I go and I check what the weekly is doing and the daily, and see what it looks like, if there's anything interesting there, because I mean, it's nice to have, but I don't make a point of doing a whole lot of work over the weekend if I can help it. I'll try and answer your questions where I can on the Telegram channel, or whatever the case, but over the weekend, that's my time out. That's very much my time out, although I take a lot of time out during the week as well, but I deserve it. I'm older. Don't have to be working 24/7. Oh, that's for someone else, man. That's not for me. That's insane. That's why you trade in the first place, is so you can have a better lifestyle. You know, you don't want to be working all the time. Yeah, if you're going to sit, you take on trading. Now, there's 2 reasons. You might take on trading because you want to make money, or you might take on trading just because you want a better lifestyle, be able to work from anywhere. One of those 2 reasons might be your main reasons. Third reason might be because you love trading, which is, you know, pretty much my case. because I don't need to trade. I could just use the investments. But, you know, you get addicted to it and you enjoy it and it's a bit of fun. So, yeah, there's different reasons for you to get involved in the trading. And, yeah, it depends on you. You get into trading because you want a better lifestyle, and then you sit on the charts and you look at charts all day, 5-minute charts, 1-minute charts. You sit and you trade and you watch the red and you watch the green and you get in and out of trades and you panic. But you got into trading for a better lifestyle. But you spend your whole life behind the computer screen, or you spend your whole life stressing about the trades rather than getting out there and having a bit of fun and having that lifestyle that you got into trading for anyway. So the strategy I talk about all the time is a strategy that gives you that better lifestyle. You can take a position in the market, leave it, and come back on another day, and it doesn't really matter. Important. If you got into it for a better lifestyle, don't destroy your lifestyle. You know, try and enjoy your life as well, and do the stuff you want to do. Don't get stuck behind the computer, and then or in your little office all by yourself, because trading is lonely. As I've said, trading is a lonely place, and the buck stops here. So you want to go and stay with people, with company, and hang out with people and stuff like that as well. That's why 4-hour trading works for me, because I can position the trade, walk away, not worry about it, come back later and see what it's doing. Just deal with the losses and deal with the profits and move on. Like I said, I'm not one of those traders that's here to boast to you about, I made this much money today, or I lost that much money today, or anything like that. Just remember, if I say to you, I made $150,000 today, then I must have a huge gargantuan sum of money in my account to have made that money. Like I must have at least $500,000 in the account to have made $150,000, to be fair, or to even have lost $100,000. You can't do that unless you've got a large account. If you've got a $10,000 or a $1,000 or even a $20,000 or a $50,000 account, you cannot make that sum of money today. It's not possible. Not unless Lady Luck fell on your lap and you took the gamble of a lifetime that you risked your whole account on. No, that ain't happening. So you got to think about that when you see these headlines and you see these guys doing that. Think about that. Think about, can I do that? Can I actually do that? Do I have that kind of money? Do I have that kind of capital? Is that the kind of money that I can make? Probably not. So, and also, you know, are you going to risk a huge sum of money like that if it's your first week trading or even your first 6 months trading? Are you going to put that kind of money at risk? Because then you really are quite a strong psychological risk person. Perhaps you should be in a casino. I don't know. But to risk that amount of money at the start of your career is a bit of a mistake. I always advise or say, don't do that. Rather do demos, then do some funded account work, and then open your cash account. Don't take every last cent that you've got in your life and put it in the cash account. You can put it in your investment account. That's fine, because that will grow. But don't put it into a leverage trading account. Don't put every amount that you've got into a leverage trading account, because there's a good chance you're going to lose it. There is a good chance, okay? Most traders do lose. I know you don't want to be that trader, but most traders do end up losing. And, you know, if you take that last sum of money that you've got, maybe it's a pension, maybe it's a payout, I don't know, and you don't have a job, and you go and you put all that money into the markets, every last cent, and you don't know what you're doing yet. You haven't really qualified as a proper trader yet. You haven't got to that point where you know the markets inside out. You think you do, but you don't. And you end up losing it. What do you do next? Ask yourself that question. What do I do next if that happens? Okay. So be careful of that. Um, Lifestyle to make money. I love the trading. If I could make 10K per month from trading, I would be happy every month, consistent. Sir Lunchalot, that's most traders love trading, and this is something you will find. A lot of people have asked me, why do you still trade? And I'm like, because I love it. I'm addicted to it. It's like riding a motorbike. I enjoy it. I enjoy doing it. So I still do it. Crazy if you think about it, because, you could just live off your investment account, leave it, just do whatever you want to do. Perhaps I could make millions of YouTube videos about something else. I could do all kinds of things. I could start another business. I could do it, but I still trade. Still trade. Keep on trading. Non-stop trading. Because I love doing it. So, yeah, I get that, Sir Lunchalot. Most traders will feel the same way. We all want to, look, traders are, we're all in the game to make money. I mean, the money is the end game, okay? We love making money. So whatever you can make money out of, you will. Also, you love the lifestyle. The lifestyle is good. You get the free lifestyle. You don't have to go to work or anything like that. So that's great. That's fantastic. But at the end of the day, there's something about trading that just sucks you in and you don't get away from it. I've tried. Believe me, I've tried. It's like smoking cigarettes. I stopped smoking 30 years ago. And, well, actually, no, it was a bit less than that. 27 years ago, something like that. I stopped smoking. And it was difficult. But I didn't stop trading. Love trading. And in my first couple of years, I couldn't make money to no matter what. I struggled in those first couple of years. So, and you keep on trading, and you keep on trading, and you keep on trading, and you keep on trading. You don't stop. There's an attraction that you can't get away from. So yes, it's addictive, and people love it. And most traders that you'll speak to will tell you they love it. So I get it. Everybody, that's what it's about. It's all about the love of trading. Random mentions if you could make 10K per year per month, 10K per month trading, you'd be happy. It depends how much capital you got. If you've got the capital, you can make the 10K. If you don't have the capital, you can't. So what I normally equate it to, look, most of my investment accounts I'll separate from the trading because that is unfair. So if you just take the trading alone, okay, there, I always use an average of 25% per annum because I know you can make 30, 40, 50%, sometimes even 100% on leverage trading. Some years you take a loss, okay? That happens as well. Just bear that in mind on leverage trading. But if you average on 25%, then you're in a fair sort of place, okay? Fair sort of area. So 25% per annum. So if you've got $1 million, that's $250,000. You divide that by 12, it's just under $25,000, $23,000 a month. Okay, so that's kind of how much capital you need. So you're going to need, for $10,000, you're probably going to need a capital amount of about $500,000. So I'm just throwing that out there. That's realistic figures, realism. Okay, you might get lucky. You might make 100% per annum or 200% per annum. You might make 50% per annum. These are unheard of figures, by the way. They're insane. They're great figures. But where can you go in the world and make that kind of interest or that kind of money? But if you do, and you're lucky enough to do that, that's great. But base your plan on something real, on something realistic. And I always see something like 25% as a realistic figure. Say, well, if I have a strong, hard-working year, I should get that. And if I get more, that's bonus. If I get less, that's not so bonus, is it? So yeah, that's kind of where you look at it. That's how you work it out. And when you start working it out like that, it might start bringing your mind down to earth as to what you can and cannot make with regards to trading. There's too many people get into trading with too little money and then think that they're going to make those gargantuan figures. But you need the money to make those figures. That's the difficult part. That's the difficult part. You need the capital to get to those figures. Okay, so I didn't want to stamp on anyone's thoughts there, but just think about that. Okay. The only trouble with funded accounts like these funded accounts, I have even got a 100K funded account as well. The big problem is the profit sharing, the amount of profit sharing. That one does profit share 90%, which is great, but some of them don't offer that much profit sharing. So just watch how much your profit sharing is so that you're getting a decent amount out of your winnings, okay? And limitations to pay out. I mean, the one account that I've got, they'll only pay me out after I've made $12,000. So, you know, your profit's sitting there. That's also pretty tricky. So keep an eye on that when you're trading with funded accounts. I only use the funded accounts for this channel. I only use the funded accounts so that you guys can learn and whatnot, so we can take trades together. And if someone out there scams the world out of me and steals my account, I probably won't drop dead from it. But if it was my real cash account, my leveraged account, that would cause a heart attack. So I don't want that out there. If you guys don't mind, that's not something I want to promote to the world. I think people that do that are silly. Okay, it's insane. There's a lot of bad people out there, a lot of dangerous people out there, and you don't want that kind of scenario. I always grew up being told by my dad to be humble, be normal, not to be a show-off and an idiot, and also don't tell anybody how much you're worth. Interesting, that. Good point he made. Okay, so guys, it's quite late. We've been here for quite a while. So on that note, I think I'm going to move on, and I'll see you guys on Thursday again. Look, I'm not going to change the time this Thursday because it is later in the day anyway. And but I'm going to look at it for next week, because this 11 o'clock show on my side, which is, I don't know what time on your side, is 1100 GMT plus 2, is not working out for everyone. So with the move in the hour, so I might have to move it an hour, but I'll see how that goes, and I'll let you guys all know in the Telegram channel, and we can take it from there. But like I said, on that note, I am going to move on. I'm going to get on with my things. And I want to thank you guys for being here. I hope you've enjoyed the show. I hope it's been helpful to you in some way or another. For those of you who got in late, at the beginning of the show, I did go over price action trading. I did the training for today. I did say that in every live show, I'm going to try and give you guys a training session on something. Today was actually our main thing, price action trading. So if you want to go and have a look, we talked a little bit about price action trading today. We've talked a lot about many other loads of, you know, rubbish and stuff like that we like to talk about. But yeah, mostly gold by the sounds of things. But thank you so much for being here with me, guys. Keeps me company. I enjoy it. It's a bit of fun. I love it to bits. And I'll see you guys again on Thursday.